Hi, Larry Gaines, TastyTrade.com. In this video, I'm going to show you a really interesting, neat spread trade setup for kind of looking at buying a kind of a market where it's starting to stabilize, maybe bottom out. So this is what we call a diagonal spread or a calendar diagonal. So basically, it's a strategy that is kind of very similar to a calendar spread. And what it does is it takes advantage of accelerated time decay of the near option month at a faster rate, which decays faster. And then you go long an option in the back month, which decays a lot slower. So the other thing that it adds to it, other than a calendar, is that it also adds an additional vertical spread component that then adds potential profitability of the spread. So it's like you can structure it where you're actually buying options at a discount, and the trade result is also at a net debit. So it's a defined risk trade. So let me show you an example of a trade setup where this is a really good strategy. So here's Intel, and Intel's had a huge sell-off, came down, and it's kind of holding a support level. We've got momentum shifting up, so it's got potential to get off the bottom here. And let's take a look at a longer term chart too to show you this. So you can see here, this is a weekly long term chart. It's got really good support right down here at 42, and on the weekly you can see it's trying to turn up. So one way to trade this is with what we call a calendar diagonal, where we can actually set up a spread and target a certain price target, which would be here $47. And this is taking advantage of selling options closer in, shorter dated, and buying a longer dated. So it's kind of like a covered call. Sometimes it's called a poor man's covered call. So let me show you what the structure looks like. So here's the setup. This was buying, like going out and buying the July 19 option series, the 45 call. So that was that set up for $1.48, and then selling against it the 47 call. But instead of doing it in that July time frame, we're going to do it closer in. So this was selling the 28 June 47 call at 38 cents. All right, so now we've got on this call a calendar diagonal. So it's kind of like a call debit spread, or you could think of it as a covered call, but instead of buying the stock shares, we're buying that 45 call, out in July, kind of a longer duration, and so it doesn't have as much theta decay. So if you look here, you can see the theta here for that 45 call is $1.98, so it's very low theta decay. And then the theta decay for the June 47 is positive theta of 2, so it's a positive theta kind of trade. So what we can do then is we're targeting 47. If it goes to 47, we can make a profit. Let's say if it went to 47 this week, which it probably won't, that this would be up $67 on our risk. We've got a debit risk of 109. All right, or if it just turns sideways, we can then cover in that 47 call, take profit on it if it decays, and then we can sell the next series further out. So instead of the June 28, we could sell the next series, which would be like a July series. And so it's kind of like a covered call. So it's a great way to play for income or play for buying longer dated options at a discount. So if you'd like to learn more about this type of option income strategy or buying options at a discount, make sure to join us this Saturday. Going to be doing a free webinar on all kinds of different option strategies that are for income, profits, and also hedging. So here, make sure to use the link below, or if you ever need to find what we've got going on, go to our website and I'll show you where. So head on over to TastyTrade.com and then go to upcoming live events. Click on that. It'll show you what we've got going on. So for this Saturday, we're going to be having a webinar, free option income strategies every trader needs to know. So option market maker secret, benefits of selling versus buying, how to buy options at a discount, and top 6 option income strategies. So sign up there, and I look forward to seeing you this Saturday.